So we figured we'd start with our own stories as to what brought us into our respective businesses. You want to head off, Ashish?
Sure. So I was born and raised in India, like everybody else. I grew up poor, and one of the interesting things about being poor in India, we had a ration card. So if anybody here is from India, the ration card basically gets you your rice, wheat, and oil for the week. But at the end of the day, after 10, 15 years of poverty, you realize that you actually don't exist, right? You totally are excluded from the financial mainstream, and you continue to be a number. And if you look at the world today, 2.5 billion people who live in extreme poverty and 67 million refugees who get a lot of financial aid or financial inclusion things, at the end of the day, they continue to be refugees, 17 years to be precise, and the 2.5 billion people who live in extreme poverty are getting financial inclusion, but in many ways, we're certifying their poverty because they're not breaking out of the cycle of poverty because they actually don't exist. So we'll get into that more. Does that help?
For sure, and I am Australian. I grew up one of 8 kids. My father worked multiple jobs. And I think one of the things that both Ashish and I have in common is it's actually not about your level of wealth within the household. Your financial health comes from your family and your community and the messages that you're given. And we were both given great messages from our parents that enabled us in the course of our lifetimes to get educated, get careers, build businesses. But I think, the key thing, especially as a Western woman, we're told, work hard, earn your money, save your money, but then it kind of stops there, right? The message really stops in, okay, now put that money to work, grow your money. And it's sort of a next level of financial health and financial inclusion is access into exactly what was being discussed in, like, when you talk asset management and wealth management, and like the flow of money through the world tends to go from the poor, lower class, middle class, straight to rich people. It's a one-way flow of money. So that's what we're talking about today.
I'll give you guys an example, right? So this is a live thing that happened to me back in 2014 when I was working in Eastern Congo as a volunteer for USAID. And one of the women farmers that I was working with, she had made a couple $100s on a harvest. And if you've ever been to Bukavu or Goma, you'll realize that that's a lot of money. But what's interesting, I actually got in a fight because the local bank wouldn't bank her. And they were not willing to bank her, first of all, because she was a woman, which I thought was pretty stupid because she was smarter than I'll ever be. And what was interesting about that fight was they needed a male co-signee. But then I got into this argument where they wouldn't recognize her existence in the sense that she had land, she had harvest, she was using an M-Pesa account. So think about it, right? She was like a blue chip customer in my mind. But the guy kept saying, I can't bank her, but I can bank you. That's where the name comes from. And for me, that was like a punch in the gut because here I was, an American guy with a passport, and I was being completely bankable. Yet this mother who actually had all this information, had all this data, she had seen horrors for 50 years, but was completely unbankable, yet she had a microfinance loan, she had an M-Pesa account, she had all these aid agencies working with her. Because in many cases, to Jay's point here, she did not have all the right constructs that made her bankable, because technically she did not have what we call an economic identity.
And I think a lot of the conversation around financial inclusion almost starts and stops there. Let's go to the worst case scenario, the poorest of the poor, and then everyone else, oh, you're okay, you're eating and you're sleeping, but you're okay. And I think there is a massive opportunity in terms of financial inclusion for people just who have cash flow. Like you actually may be considered wealthy by any measure around the world, but you're deep in debt. You've got now like depression coming on because of that debt. You don't know how you're ever going to claw out of it. But as a society, we're encouraged to spend. Spend. Keep up with the Joneses. And I think there is a massive opportunity to think inclusion in a very different way than just, the woman who inspired Bank U.
Right. And I think talking about solutions, right? Because I can depress you with more depressing stories, but it's really the value is the solution, right? And so folks like us, we're using technologies like blockchain, and I'm sure you heard a million things about it. But the real value of technologies like blockchain is less around the romance with Bitcoin and everything, which obviously on front cover Wall Street Journal today. But it's really the value. Think about that mother again, right? Or think about a refugee in the Zaatari refugee camps of Jordan-Syrian border. In today's day, they'll spend the next 17 years of their life in that refugee camp, right? And all the things that happen to them get reset every time they get moved, which means that you can call them a financial inclusion client, but they'll never break the cycle of poverty or being a refugee, right? So what's the solution? The real solution is to then leverage technologies like blockchain in a way that refugee or that mother in Congo can own their data. right? This is kind of a fundamental shift in thinking that we're pushing around society today, around especially poverty and refugees, is if refugees can own the data of their education, health records, or poor people who have access to information on their harvest and land and things like that, that's the baseline that's going to allow you to break through and not be just a number, right? So that's kind of where solutions matter when it comes to poor people.
Yeah, and I think in terms of inclusion or solutions that can enable inclusion are really around, you can say education until you're blue in the face, and you can say, let's give access to better technology and better tools, but unless it's actually activated, and that needs motivation, and that goes to the core of the human condition, which is, money is scary and emotional, humans are complicated, and if, you should have a budget, and we've got a great PFM app worked, like, we wouldn't have this country, especially in the deep sort of consumer debt crisis that we currently have. So in terms of solutions, there is a way to set a much longer term path. Like, think in terms of, this is now, in every company thinks in terms of customer life cycle and lifetime value, but think of this as, it may take you 7 months to get one thing installed, and it might take 2 years to get a deposit into a savings account, but that's okay. Like, as long as the path is moving forward. So it's a fundamental reframing of what that path is, which doesn't tend to go well, especially within most institutions, when people change jobs every 18 months. And it's not really a hard KPI to see financial health, but it should be.
Yeah, and Ajay, just to tag on that, we were talking about this backstage. So if you look at what's happening with financial inclusion, right, just the definition, I'll repeat myself a little bit here. The core definition that we understand today is people who are poor or people with less resources, we're going to give you some money, and we're going to certify your poverty, but you'll stay poor, right? I mean, it's just true, right? And how do you break that? The way to break that is the kind of the work that Jane and I do is really to take a step back and ask yourself the question is, are you actually connecting the dots for people who don't have resources, right? And the dots could be something as simple as a supply chain. So I'll give you my personal example. I was just in Southeast Asia working with some of the poorest farmers in the world. And if you're a poor farmer who is providing, grain or coffee or whatever in a large supply chain, at the end of the day, nobody really knows the farmer, right? So you could go buy a, expensive cup of coffee thinking you're supporting a Rwandan coffee farmer. The reality is that nobody knows who the farmer is, right? Which means that farmer, very much like a poor person here in the US, is going to be unknown. And this is kind of where technology can matter, because technologies like blockchain, like the way we use it, allow the farmer to participate equally in the transaction so that they are actually known, right? So I can digitize their land, connect it to their biometrics, and so the farmer now owns their data. Very much the point that Jane's trying to make is, if you can own your data, then you're going to be more responsible financially.
Yeah. And data is always tossed around as the be-all and end-all at conferences like this. But I started my career in data marketing. I've spent 20 years in the digital world. And being around big data for that long, you get to some fairly, interesting insights, which usually data is just used to sell you more crap. That's it. Like, how do we upsell? How do we cross-sell? How do we reduce the cost of servicing this client? That's what we're using data for. Like, the humans of the world generally don't own their own data. They don't get value from their own data. And that was sort of one of my key insights in starting Goldbean, is that we're trained from birth as consumers, right? If there's one thing we're really good at, is spending money. You recognize brands, you recognize companies, you make portfolio-level decisions every day with your wallet. So let's use that as a starting point. And so that's how the Goldbean platform works. We look at someone's purchase history, and instead of saying low-cost ETF and mutual fund and index fund and balance and risk and putting everybody to sleep and making them frightened, they're like, you spend a bunch of money at Amazon, they're actually a pretty great company. We're going to include them in a portfolio for you. Like, if you shop at loser companies, we wouldn't include it. But using data in a way that gives the value back to the end, like the owner of the data, like regardless of where you are on the economic spectrum, it's really important.
Yeah, I'm going to give you another example, right? So when I came to the US about 25 years ago, I had $240, right? And I had an employment letter and a 1-month prepaid rent receipt. At the end of the month, I was able to show my rent receipt, my utility bill, my cable bill, and my pay stub. I was able to staple those, and I was able to get a credit card, right? What's the power of that example? Now, if you think about that same example and the Congolese mother I interacted with in 2014, she had land, she had harvest, she had education, yet she didn't exist, right? Because at the end of the day, her data is sitting in the silos of every INGO. And this is not a slam on INGOs, just an honest conversation, guys. in the silos of the UN and the INGOs, right? And this happens to refugees and people in extreme poverty and people who are going through modern-day slavery. Their data sits in the silos of everybody's database except their own, right? You don't own your data here today, right? But it gets worse if you're a refugee. And if I moved you from Zaatari to Azraq to Berlin, it's almost like you, as a refugee, you're walking on with a big reset button on your head that somebody resets you every time. I think that's unfair, right? And so if you're trying to make the world a better place, financial inclusion is a key answer, but the definition should be less around giving more aid or more money to keep people poor. It's more connecting them to the supply chain by empowering them with data.
Yeah, and I think, I mean, it's a great lesson for everyone is somewhat responsible for financial inclusion. Like, you can do things every day that can help move the needle forward. We often do like gender and race experiments at conferences like this, in that, you know, I get walked past and all of the dude founders get all of the love. It's like, this is, you know, it's just so ingrained in people that, you know, she can't possibly have anything to say that's of interest. And so having a sense of, that was just completely self-serving request, but having a sense of, you know, what can you do every day if you are in the digital world, regardless in the spectrum, like designing not necessarily for shiny object syndrome, but for, you know, maybe people who can't read and write. Like, there is amazing technology now where you can build tools and platforms that it's not about like servicing for disability, but it's servicing for different confidence levels and different knowledge levels and different experience levels.
So no, I actually want to go down the gender equality path, right? I mean, women are smarter than men. Just admit it, guys. I know for a fact, right? But here's an interesting fact that most of you may not know, or you probably do. Women in extreme poverty zones have to pay at least 5 to 7 percentage points more to borrow on a microfinance loan. That's just a shame.
Oh.
But there's data that proves that women farmers are better farmers than men any day. So here's a simple solution, right? What if we reduce the borrowing rate for women farmers worldwide, and you can start solving the question around extreme poverty? Because I just came back from Latin America. A lot of the coffee that's grown in Latin America is grown by women farmers, but they have no access to good finance just because they're women. I think that's just shitty and bad. Sorry.
Yeah.
Sorry, Will.
But there's also support that you can give organizations. So there's an organization called Trickle Up that work with that last mile, extreme poor, the last house in the village, the worst field. But they're actually encouraging not just microloans, which can be almost like payday lenders, the equivalent of, but they do grants, very small grants, but they make the grant recipients form savings groups. So now you're actually building the community. Some money's gone into the community, there's discussions, they can loan the money to each other, but now there's responsibility. It's not that sort of learned helplessness of we have to wait till the next aid truck comes along. But Trickle Up is amazing.
And the aid example is a great one, right? I mean, it's like, if you think about what has happened in the world with this buy one, give one, right? In many ways, I don't like models like Tom's Shoes because they're destroying economies, right? Because we don't respect the fact that people who live in poverty or refugees actually have a full understanding of the supply chain, have a full understanding of the economy, right? And I think where we, as smart people, can do is, where we can help or actually participate, is to enable technology solutions that allow people in extreme poverty or refugees to participate equally. That's kind of one of the biggest things, right? So if you look at women farmers or education for refugees, that's a big issue right now in the world right now, that millions of refugees who are very educated cannot establish or prove their education, especially women, right? When I work with the Syrian refugees on the Jordan-Syrian border, there's thousands and millions of girls who will miss out on education because nobody's willing to certify their education. That's a great example where you can use a technology like blockchain, what we're doing, where we're certifying education for girls so that they're never held back again. That's how you empower people.
Yeah, and I think just from a macro level as well, there is this idea of, you know, for better or worse, we live in a consumerist society, but it's changing the conversation. And like, my journey changed profoundly when I started my career in Asia. And the conversations that I would have with my friends and my colleagues for, 7 years in my 20s really changed who I was in terms of my approach to money, in terms of transparency and visibility. And then I moved to the US, and it was almost like going back to Victorian era. I couldn't have the same conversations. Like, that transparency was gone, and I actually would be laughed at when I would, I would endeavor to have the same conversations about investing or stock or, what do you think is happening with the interest rates? And it was like this weird, you're the best of the best in New York City, and if you're struggling with this conversation, what is happening elsewhere? And I think, bringing money to the table, again, regardless of the economic situation of the people you're talking to, is a positive and necessary conversation. And for too long in this culture, it just hasn't existed.
Yeah, on the same token, right, there's the part of it is just ignorance, right? I mean, I'm sure you've heard a lot about, the emerging technologies, AI and blockchain and everything, but I think we forget to ask about the real application when it comes to, the part of the world we don't live in, right? So it's the classic pity check, right? So, as you leave this session today, my humble request to all of you guys is don't have pity. Pity is a really bad thing. If you have a pity on a refugee, you're degrading them even further, right? What you really want to understand is, can you actually interact with that person in a dignity framework, right? To the point where you can actually trade with them. You can actually have a transaction with them where they don't feel, we were just talking about backstage. I've been in so many refugee camps where all these aid guys will stand up and they talk. And I learned very quickly, you got to sit down. You got to be physically, you have to sit on the floor to interact so that you feel that you're part of the conversation, right? And I think that applies to all of us, right? If you truly believe that financial inclusion can enable people out of poverty, then don't just cut your pity check.
Yeah, and I think, to what end is often a great question for financial inclusion. Like, so you're going from extreme poverty to poverty, or you're going from lower middle class to middle class. Like, it's not a linear journey. I think the world, and I love these conferences because you see how fast the world is changing. Like, you have now a 1099 economy here. Like, you have a perfect storm of people who no longer have a steady income, and yet they have steady costs, and they don't know how to manage their own money, and don't have a line of sight around their own retirement and financial health. Like, that is what financial inclusion has to be about for the future. It's not just about that one linear step up.
Yeah, the last thing I'll make a plug, and we want to take some questions from you guys, is think about identity less in terms of a number, right? There's a lot of conversation these days around identity on the blockchain. Honestly, that's 2015. That's just old news. The real question is, can people have transaction identity, right? So my partner right now is working with refugees on the Somalia-Kenya border, and we signed up 1,000 of them yesterday. And it's amazing to see that a refugee now can have a transaction identity that shows them their education history, their health history, and their microfinance history. That's the real value in pulling people out of poverty and giving people dignity back. Should we open up for some questions?
Questions?
We'll take a couple questions so that it's not just Beauty and the Beast talking here.
Or loud and louder, one or the other.
Thank you for the conversation.
Nobody got the Beauty and the Beast.
Thank you for the conversation. This is a really great perspective. I was curious to your thoughts on microloans and sites like Kiva. Are they helping the situation or hurting the situation?
So I'll give you an honest answer, right? I think they would help if they're part of a supply chain.
Yeah.
Most often they hurt. Here's why, right? I was in Myanmar last year with the Rohingya refugees, and I interacted with a lot of mothers who had 4 microfinance loans, okay, from 4 different MFIs. Yet they were all funding the same inventory in the same village that hadn't moved in 6 months. So microfinance is great if it actually connects to a supply chain that allows them to participate. It's horrible if I keep giving you $100 at 18%, and then you borrow from another person $100, and I have a 98% return from you, right? So that's where I think it hurts. And the live example, don't take my word for it. You go to Bangladesh, right? The birthplace of microfinance. Bangladesh still has some of the poorest women in the world. I rest my case. Sorry.
It's okay.
You've hit on one of the deep questions that runs throughout the conversations today, which is social constructs and where technology meets humans and human behavior. So how do you fix the problem, right, societally, that prohibits your farmer in Congo, the female farmer, from getting a bank account, right? Because we can have the best technology, but if we can't solve that truly human behavioral problem where women are property or less than, we're not going to fix this. So
So the quick thing on that is, I think it's not about the technology, right? It's never about the technology. And we've actually proven now, we're live in 5 countries, right? We've proven that what you really are up against is not the societal constructs, it's more about the intermediaries who don't want the mother to own the data, right? And so the way to break it, and this we found the nugget, is to not go to the NGOs, not go to the intermediaries. You go to the end user, right? So if you're buying the cup of coffee, right, and you're the big coffee company or you're the big whoever, right, then you basically enforce the supply chain that gives you visibility to the mother. Because then you're going to start reducing the intermediaries. So the social construct then goes away. And we've proven that works because it's all about the data at the end of the day. The mother, if she has access to her land and her harvest, nobody can stop her from breaking the cycle of poverty.
Yeah, and I think from our perspective, it's working with the institutions who work in a way that, it's cross-sell. Like financial institutions live and die through, you have retail banking on one side, which you cross-sell products and you get interest on loans and charge fees. You have wealth management on the other side, which is come in rich people and we'll manage your money and take some every year. And, that has been the human behavior for everywhere. And the messages sent out to the world is that this world is only for rich people. And that this world, come to the bank and we'll give you more and more, and it tends to be more of a debt thing. And I think at the end of the day, most financial professionals want to do the right thing for their end customers. They do actually want them to get financially healthier, create the options in life that everyone has hopes and dreams where you only have to watch bank ads. That's what they're all about. But there's very rarely that bridge. And the technology can help the bridge, but like utility without education and utility without motivation doesn't go everywhere. So it's a much bigger problem, but it's a one well worth solving. At least try. Like, I think that's the thing. You have marketing over here, products over here, and that's been the case in the past. So technology allows you to have much deeper engagement, much better sort of assets that people can engage with and learn themselves and experience themselves. And that is where the world is going. And whoever can solve that from a financial services perspective will win. Like if you can give almost like an open API platform for here's all of the different solutions and you can go and experience and learn and take what you need, like that will be amazing.
I think our time's up.
Our time is up. Thank you so much.
Thank you, guys.